Folks, it's getting really ugly out there. It's a Macho Man Randy Savage, and yeah, man, it's getting real nasty in that market. Holy smokers, guys, this ain't no jokers. Se está poniendo feo, amigos, okay? The market is getting ugly and getting ugly fast, okay? NASDAQ dropping rapidly, and we're watching stocks bleed, okay? I'm talking 4% moves, 5% moves, 6% moves, 8% moves. I've even seen some stocks today down over 10 percentage points, okay? And it is across the board pretty much. Even the Jack Jackson stocks are all falling today. Look at that, okay? Just stock after stock. I mean, I couldn't even save those stocks. I came out with the video last night, 99 stocks to watch now, all Jack Jackson stocks. I couldn't even save those stocks, okay? Big tech, look at big tech. All down across the board. You know, the FB's down over 3%, Amazon's down 2.6%, Apple's down 2.7%, Google McDougal's down almost 3%. Look at Nvidia today. Nvidia almost an 8% drop on earnings that people said were flat out unreal, amazing. And what happens to that stock? It goes down 8%, man. That's when you start to feel like maybe you're at a little tippy top in the market, when you come out with some, you know, just insane numbers and your stock drops 8%, okay? That's the type of market we're starting to get into here, okay? Obviously, Tully Mully's down big today, Home Builder, Zillow. It's stocks across the board, whatever you look at. I have a tab basically on my stocks tracker app, and it's basically a tab called No Valuation Care. And what do we see? We see all those stocks I have on there: Tesla, Snowflake, Chipotle, Zoom Video, Shopify, Amazon. All those stocks that are on that list, all down big today. So all of a sudden, whoa, all people care about valuations. In this video here today, we're going to talk about how ugly this market crash could get, okay? We'll talk about that very in depth. Then we'll talk about what to do in this market crash, and like what stocks I'm buying, how I'm going about it, things like that I'm doing in the market. So hope you guys enjoy this video. As always, don't forget to smash. Even on a down day, you got to make sure you smash, okay? Today's video sponsor is the Stock Hub, okay? If you haven't joined us in there, it's absolutely free to do so. It's linked in the description. It also has a pinned comment. If you don't really know what the heck you're doing in the market, maybe you just got lucky over this past year, made a little bit of money, and now you're trying to take things to the next level and actually know what you're doing in the market, well, we can help you as far as that goes. If you want to fill out an application to try to join the private group /Financial Fortress, that's going to be linked in the description area down there. We also have that as the pinned comment. Alrighty, guys, first up here, let's talk about how ugly this could get, okay? So first off, let's look at the NASDAQ, because I think the NASDAQ's the real index or indice, however you want to look at it, okay? That's a real one you want to pay attention to right now. It's actually not the Dow, and it's actually not the S&P 500, okay? The NASDAQ. All eyes should be on the NASDAQ right now. And if you look at a 5-day chart for the NASDAQ, it looks pretty darn sharp, okay? NASDAQ was right around 14,000. And, you know, here today, it's been trading anywhere between like, right around like 13,100 and 13,300. And so it's definitely a big fall, a pretty dramatic fall in a matter of a few trading days, and definitely has shaken some people up and like, hey, okay, the market doesn't just go up every day, every week, every month like it's been doing recently. But when you back it out, this is what's crazy about that. Even though that was really sharp, when you back it out, it's nothing on a 1 year. Like, look at the 1 year chart for the NASDAQ. Like, this is just a little baby fall. I mean, look at that. This is literally nothing. What has happened over the past several trading days is literally nothing as of right now. And that's the craziest thing to kind of think about here, okay? And then you pull out a 20-year chart of the NASDAQ, and literally it doesn't even show up, okay? That's the craziest thing. Look at the 20-year chart of the NASDAQ. My goodness, guys. You gotta be flipping my flapjacks. You can't even see this little latest drop here, okay? It's literally that minuscule on the chart. Just absolutely unbelievable, okay? Now, let's get into some fundamentals. I want to show you guys some things that are going on. We're going to look at Yardeni Research that always has some really good reports and kind of seeing valuations, where we're at in the market. And when you kind of look at some of these things, you can kind of figure out how much you could potentially drop in the market, okay? So what I want to look at first is forward PEs. And if we look at S&P 500 large caps, I mean, we are really rich. No, we're not really rich. We're really overvalued. I don't even know why I put really rich on this chart, okay? It should say really overvalued. Plain and simple, okay? Plain and simple. Not really rich. You know, in the past, it was like, oh yeah, market's a little high. It's a little bit. Nah, okay? Recently, we're just straight up overvalued, okay? Remember, forward P is looking at, the next several quarters, the next 4 quarters for these companies. And keep in mind, a lot of these companies have really good numbers as it is, okay? And when you're trading that high, you're just straight up overvalued, okay? So, there's no argument that could be made. The S&P 500 large caps are overvalued right now, okay? But not everything in the stock market is overvalued, okay? If we look at S&P 600 small caps, what you're gonna find there is that you're a little rich, but you're not out of control. You're not straight up overvalued. So it's interesting. The large caps in the S&P are just flat out overvalued. Small caps, little rich, but not out of control, okay? Then we go ahead and if we back it out, okay, to over 20 years, right? And we look at this. This shows you the S&P 500 large caps over the past 20 plus years, okay? That chart should show you everything you need to know about the current stock market we are in right now, okay? Even if you're not some type of stock market genius, you should be able to look at that chart and say, yeah, maybe we're a little overvalued right now, okay? Just flat out. You don't have to be in doing this for 12, 13 years like I've been doing this. Literally, anybody look at that chart and say, something's a little off there, okay? But we look at the S&P 600 small caps once again, and we're high, but we're not crazy. So there's a clear divergence between large caps and small caps. And large caps, which really run the market in general, have just gotten to some really bad places, okay? A lot of those companies that are $100 billion plus valuations just gotten to some really, really bad places, okay? Median forward PE on the S&P 500. Remember, forward PE is what I like to look at the most. Trailing 12-month PE, not the most because you're going to get some Rona quarters in there, so a lot of one-time costs, things like that. I really like to look forward over the next year, okay? And that's always the most important, in my opinion, when judging the market. And if you look at median forward PE, once again, we are just flat out overvalued. I mean, you look at any time period, and it's been low interest rates for basically as long as I've been an adult, okay? Just flat out, okay? And usually, you're looking at a 13 to 18 normal range for forward Ps for the S&P 500 for a median, okay? That's normal. We've been in the 20th range recently, okay? Which means we're just flat out overvalued, all right? Look at this here, all right? If it wasn't showing you enough that we're overvalued, go ahead and look at margin debt. Margin debt's gone, through the roof. This shows you all the way back to 1995. And yeah, I mean, margin debt should go up over time as the market goes up. But I mean, it's really gone crazy very, very recently. Let's just put it that way. And look at this one here, okay? This chart shows you over the past 25 plus years, okay? This shows you margin debt over time. And what you're going to find is every time after it went on a crazy run and it went and super peaked out, every time it was followed by a huge drop. And every time there's usually a huge drop in margin debt, there's usually a very big drop in the market in general, okay? Look at this, right before the Great Recession, woo, okay? Then obviously you had into the kind of, a lot of people were talking about a double dip recession scenario, woo, okay? Then you had, there was just kind of looked like everything was grand, and then some weakness came out of China. This was in 2014, and all of a sudden, woo, okay? Then obviously we had 17, 18 climbed up, and then just a huge drop. And now recently we just went on this massive run of margin debt, and it's basically priced a lot of stocks for perfection or just put a lot of stocks in overvalued territory. And so if you look at this, what do you think's going to happen over the next few months, okay? Either that margin debt's going to keep going to the sky and it's going to be even a further drop, or we're actually going to see over the next few months a big, huge, steep decline in margin debt. It's going to be one of those, okay? The truth. Here's the truth for you, all right? The S&P 500 could fall another 10%. Easily. It doesn't mean it's going to happen, but the S&P 500 could very easily fall another 10%. And we could still make an extremely strong argument that the market is flat out overvalued, and that's if the S&P 500 fell 10%. That's what's crazy about this, okay? It's not like a time period when everything's kind of looking grand and the market's kind of priced where it would usually be priced at, and it's like, well, yeah, the market could fall 10%, but then we're going to be really undervalued. This scenario is not like that at all. We could fall 10% and we could still be literally overvalued, okay? And keep this in mind, if the S&P 500 falls 10%, that means the Nasdaq's probably going to fall 15%. or more than 15%, right? On the upside, NASDAQ usually outperforms. On the downside, NASDAQ likely gets uglier than everything else gets for the most part, usually, okay? So NASDAQ could fall 15%. If the NASDAQ in general falls 15%, high growth, super high valuation, more speculative stocks are going to fall 20 to 40 percentage points, okay? 20 to 40%. Because keep in mind, the NASDAQ is like, you know, kind of viewed as the growth engine, okay? And then inside the NASDAQ, you have a lot of companies that are just, you know, their valuations are just sky high. Like past price to perfection. And those stocks do great when everything's going up like crazy. Those stocks way outperform the market, and next thing you know, they're up another 20%, 40%, 60%, 80%. I've heard the complaints from a lot of people where it's like they try to get a position built in a stock over the past 6-9 months, and the stock just goes up so dang fast that they can't even get their position built. It's happened to me, and it's happened to others in the market because we've been in a super hot market where margin debt's been going crazy, and just, you know, valuations have become just kind of the backdrop, all right? It was interesting. It was either last week or a couple weeks ago. I was on Clubhouse, right? And sometimes when I'm like responding to DMs in the private group in the private Discord chat, I'll just like go into Clubhouse and I was kind of like passively listen. And there was one, it was a week ago or a few weeks ago. There was one where they were talking about Tesla stock, and so of course I'm like, oh, well, let me jump in here. Okay, so I jumped in there. And I was planning on just kind of passively listening to this. Next thing you know, people in there recognize me. They put me on stage as like a speaker, okay? And I'm listening to these gentlemen talk back and forth about Tesla stock. And my gosh, are they it's like so ridiculously bullish on the stock that I actually, me, the Tesla guy, I actually start sounding like a Tesla bear when I come on and start speaking about this, because I'm like, I got to interject in this. So I start kind of, you know, giving a little a piece of my mind, let's just put it that way. And I was like, by far and away, the least bullish guy out of the bunch. And I'm like, whoa, okay, we got some crazy stuff going on. Remember, a few years ago, I was the crazy guy, okay, for saying Tesla stock was going to go to $3,000 a share. And by the way, Tesla stock did that and a whole lot more, okay? I don't know what Tesla is on a pre-split basis now, but it's a whole lot higher than 3,000, okay? And back then, I was the crazy guy for saying that. And now here we are. Again, I'm the crazy guy because I think Tesla this year, you know, trading at 800 billion to 1 trillion is just silly, just flat out silly. 5 years from now, 7 years from now, maybe it makes sense. But in the short term, I mean, it's just like ridiculous. That valuation's just like anybody that should know anything about valuations that isn't like blinded should understand that and be able to view that and be like, yeah, that's a little ridiculous, okay? And so it's interesting that people used to laugh at me for being literally too bullish on Tesla. And now people laugh at me for not being bullish enough on Tesla. And it's like, you know, you can believe all you want in the business and things like that, as I do. I'm one of the biggest believers out there, and I've been on record, like back in the day, man, it was Gally and me, and it was nobody else. Like a lot of people have popped out the last year or two in regards to Tesla after it started going up like crazy. Back in the day on YouTube, for anybody that's been around a while, you guys know this, it was Galileo, and it was me talking about Tesla years ago when, you know, that stock was getting tons of hatred. And as far as YouTube, that was about it. And then on mainstream media, it was Kathy Wood back in the day, and it was also Ron Barron, and they were kind of the two people that were on mainstream media and talking about it, okay? And that's the way it was back then. And it's totally changed because the stock's gone up so dang much, and now everybody wants to jump on that train, and just like people are talking crazy. And stocks are healthy. Stocks are healthy when the talk is about risks versus reward, okay? When you talk about the downside risk, what could go wrong, why the stock's valuation doesn't make sense, that's healthy. And then you talk about the reward side, but lately it hasn't been that. It hasn't been that at all. All the talk is reward, reward, reward. Stocks are going to the sky, and risk is either hardly talked about or not talked about at all. What a market we are in right now, okay? And that's what really scares me about a market like this, when just everything is about reward, and this stock's going to $1 trillion, and this stock's going to $2 trillion, and there's no bottom to the valuation. And as soon as a stock hits that, people are like, oh, well, now it's going to the next $1 trillion. And it's like, whoa, 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 whoa. Slow your roll, okay? You do realize, like, maybe in the short term, valuation doesn't matter, but you do realize over the long term, valuation matters, okay? Same thing, it was silly when Tesla a few years ago was priced at $30 or $40 billion market cap when I was buying that stock. It was silly in my opinion, okay? Now I feel like today, if that stock's priced at 800 billion to a trillion, I feel like it's silly as well, okay? But hey man, it's the market we're in right now. Everybody's just talking about reward, okay? The moral of the story is the market crash could get worse easily, okay? Doesn't mean it will, but it could easily get worse and make 100% sense in my opinion. 100%. Not like, oh, that's some crazy thing. No, like this market could easily drop a bunch more and I wouldn't have a problem with it, and I would say that actually makes sense. If you ask me, does it make more sense for the market to let's say the NASDAQ, okay? Let's say the NASDAQ's at 13,000. Does it make more sense, in my opinion, for the NASDAQ to go from 13,000 to 17,000 over the next year, or from 13,000 to 9,000? 13,000 to 9,000 makes more sense in this market right now than 13,000 to 17,000, in my personal opinion, okay? That's the type of market we're in, okay? So next question is, now we talked about how ugly it could potentially get and all those different various factors we just showed you here, okay? Now let's talk about what to do in buying stocks, things like that, okay? First off, the thing that's going to come to some people's mind, especially newer investors to the market, sell your stocks, okay? Are you going to sell your stocks? Something like that, okay? First off, that's usually a very bad idea, okay? Trying to time out the market is an extremely poor idea most of the time. You want to know why? When do you get back in, okay? When do you get back in? Also, if you sell, who's to say it's going to go down? What if it just starts going up and up and up again, okay? The problem is it puts your mindset into a short-term trading type mindset when you're trying to sell out of all your stocks or a bunch of your stocks and then trying to jump back in and time it out and things like that. Because let's say hypothetically you sell out of your stocks. When do you buy back in? When the market's fallen 3% or 5%? Or 10%? Or what if the market just starts going back up again? Even though the valuations are already crazy, what if it just gets crazier? You know what I mean? Like it's too hard of a game to play. I've tried to play that game in the past. I've seen others try to play that game, and it's usually a lost cause. You are usually, if you hold truly great companies, you're usually better off just holding those stocks and build cash during times you don't want to buy, okay? I do that all the time. Like, if there aren't that many good deals out there in the market, I build cash, I build cash, I build cash, okay? Unless, let me be very clear, unless you hold some crap stocks, okay? Which is definitely possible. Maybe over the past year or two, you bought some crap stocks, and maybe those have done really well just because the market's been really hot, okay? If you see some stocks in your portfolio and you're like, yeah, I don't believe in that one that much over the next 3-5 years, perfectly fair game to sell out of stock, especially if you made a bunch of money on it. Good for you, okay? That's when it can make sense, okay? What am I doing in the market right now? What am I up to in regards to the stock market right now? Well, first thing, we got to talk about what I've been doing over the last few months in the market, okay? What have I been doing? Well, I've been cashing up, right? I've been, 24% cash, 23% cash, somewhere around there, which my midpoint is usually 20%, right? I always try to keep 10% to 30%. So if I'm getting up to 23, 24% cash as I've been recently, that obviously means I'm more toward not as attractive of deals out there, maybe a little more bearish than bullish, right? If you see me get all the way down to 10%, which I have in the past, I've even gotten below that. I try not to, but I've even gotten below there in the past. Those are time periods when I'm extremely bullish on the market. There's deals everywhere. It's like shooting fish in a barrel, and that happens from time to time. However, recently, I've been cashing up and I've been buying some real value stocks, some real value propositions that are very attractive on 4P basis. Perfect example is WBA, okay? Walgreens. I mean, this is a stock I bought heavily. I bought, a lot of money worth this stock in many of my different accounts, right? And I'm up $159,000 on that stock so far. Just in my main private account alone, up $159,000. Never mind dividends that stock will pay me. But that's a stock I looked at and I said, okay, valuations of the market are getting really rich. This was in December. I was putting this money in, so a couple months ago, okay? I looked at that and I said, valuations getting really rich in the market. If I'm going to put a bunch of money in a stock, it's got to be a stock that regardless whatever happens in the stock market over the next 2-3 years, I think this stock is going to make me a lot of money on its share price and its dividend as well. And that's the way I look at a WBA. I'm like, it literally doesn't matter. Stock market can go down a bunch. I think WBA is going to be a big money maker for me over the next 2-3 years. And it literally doesn't matter what happens in the NASDAQ. NASDAQ can go down to 10,000, whatever. Okay. WBA will make me a bunch of money. It was just extremely undervalued. Great turnaround play. They have so many different bullish things going for them. Great dividend payer. Like that one's just going to succeed. And also, I've also bought 3 stocks here today, okay? But when I bought these 3 stocks here today, I didn't go crazy in them. I didn't go all in. Oh my gosh, let me just plow all my money. That's not the way I do it, okay? I like to try to stay disciplined in the market and funnel in money as I see deals, okay? And a lower of stocks go that I really love, I go ahead and I buy more and more and more in those stocks, okay? And I just continue to put in money, but I don't go through all my money in one day. Because the thing is, this is like we've already had several drops in the market very recently, right? Over the last few trading days. If out in the first drop, you get rid of all your money, then as the market continues to drop, you have literally nothing to put in, right? That's not a situation anybody wants to be in, okay? So I try to buy in disciplined fashions, okay? By the way, on Financial Education 3, I might disclose what 3 stocks those were. I might do a video tonight and disclose what 3 stocks those were. So if you're not subscribed over on Financial Education 3, make sure you actually get subscribed, put notification bell on. It's actually my most active channel now. I post so many videos on that channel. It's absolutely ridiculous, especially during the trading week. There's a lot of stuff that can't go on the main channel and things like that. And news related content, all different types of content, okay? So yeah, definitely check that out. I'll probably disclose those 3 stocks over there tonight. When you see the stock market going down like this and stocks going down like crazy, buy great companies you love for the long term when they're falling big, okay? Not all at once. You don't just plow your money in one day or something like that. But as you see great stocks you love for the long term fall, make sure you buy those stocks. Okay, an example of a stock I was looking at today that I don't own right now, but I thought about buying was Amazon stock, okay? Ticker symbol AMZN. I don't own any Amazon, but I was looking at Amazon falling today, and I was like, Amazon's going to be higher 3 years from now. There's just no doubt in my mind that Amazon, regardless whatever happens in the NASDAQ, the markets in general, there's no doubt in my mind Amazon is a much higher stock, basically based upon the valuation it's at right now, looking at their growth rates in future years. There's no doubt in my mind that that stock's higher in a few years from now than it is today, right? And so that was a stock I was looking at. I didn't buy it, but I was like, it would make sense to buy it, honestly, because I was already buying 3 stocks today, so it was a bit much. I didn't really want to add a 4th. But I was looking at that stock, and I was like, that stock's a deal. It's a perfect example of a great company that has an amazing future in front of it in so many different fronts, and the stock price is likely going to be a lot higher in future years than it is today. Facebook is another great example of that one's extremely cheap valuation-wise. That's another stock that I would say, it doesn't matter what happens in the NASDAQ over the next 2-3 years. Facebook's going up. Literally don't matter what there. So yeah, there's certain opportunities in the market you have out there. Obviously, there was those stocks I was buying that I'll probably disclose on Financial Education 3 later. But yeah, make sure you take advantage of deals at the market, especially if this market continues to get weaker and weaker and valuations start to really line up. And keep in mind, remember, the small caps were already where things were the most attractive. If the small caps fall more and you love some of those small caps, don't forget to take advantage. Hope you guys enjoyed this video. As always, don't forget to smash if you haven't already. If you want to try to apply for my private stock group and get in there along with Financial Fortress, that link is in the description area. I'm going to also have that as the pinned comment down there. And yeah, that will definitely bring you a ton of value if you're allowed in there. Thank you for watching and have a great day.